Big call on Meta ahead of earnings tomorrow. The company was initiated just a short time ago with a buy rating and a $200 price target. Rich Greenfield of Lightshed Partners, the man behind that call, he joins us live. It's good to see you again. It's been a while, and I know you like living on the edge a little bit and being a contrarian. You've never shied away from that. But right before of earnings now, why?
You know, I think the reality is things are starting to get better. I mean, you've certainly seen Meta bounce off the bottom, and we certainly could be criticized for being late, right? This thing was in the 90s not that long ago. But remember, 3 years ago, this thing was over 200. A year ago, it was over 300. So this is clearly a stock that's still down significantly off of its highs. And I think what people are really missing is that 2023 is not going to be an amazing year. You're going to see progression and things getting better. But what we're really betting on is that over the course of the next 3 to 6 months, you're going to get a sense that the earnings power of Meta in 24 and 25 is substantially greater than what people are expecting now. And I think that's what's going to be the big unlock for investors is the acceleration in earnings, like actual earnings growth in 2024.
I mean, how do you view all of the issues around the change of focus, if you will, to the metaverse, the attention moving away, and these are my words, obviously, from the core business, as some have suggested they have done. And they want the company, I'm talking about large shareholders, right, who've written letters to the company and talked to management, like rein in the spending, focus more on what got you here in the first place. Do you really feel like they've heeded that message? Because I think the jury's still out.
You know, I think when I spend the more time I spend around employees and people that deal with Facebook, meaning ad buyers who have relationships with Meta, meaning Facebook, Instagram, et cetera, their tone is that there's been a meaningful shift back. You know, Marnie Levine and the team are really shifting employees back to refocusing on what Meta does best, which is sell ads. So Mark's got his projects, and there's no doubt that they are continuing to invest. I think a little bit less than maybe they would have otherwise done, given the overall sort of what they're hearing from investors. But the focus on Reels is working. It may not be as much fun as TikTok. I don't think it is, but it is working. They have successfully copied the product, and the sort of artificial intelligence, machine learning of how it shows you not things that you follow, Scott, like, because that's what Facebook was about, right? It was you and your friends. The content that they sent is what you saw. Now it's basically just what does the algorithm think you'll find interesting based on what you've looked at before? That's what TikTok invented, right? Well, Facebook has invested aggressively, huge investment that's permanently impacted the margin structure of the company, but it's working. It's bearing fruit in engagement. And now the advertising is really starting to kick in. And I don't think investors are giving them enough credit for how much that's going to translate into revenue growth, because it's a better advertising product. Full screen video is a much better product than what Facebook has sold historically with those boxes of pictures and ads before.
Josh Brown has a question for you.
Rich, nice to see you. So
Thanks, Josh.
When you say it's working, financially it might be, and that would be great in the short term, and I think the street would respond to that. But what if financially it's working in the short term, but longer term it's having a deleterious effect on how much engagement the users will have, like, let's say, over the course of a year or 2 years? Because we've seen Snap and Twitter and other platforms make a change that in the near term led to more money for the company, but led to much lower levels of engagement longer term because people hated it. The Kardashians hate the new algorithm, and they want Instagram to go back to being Instagram. They can't be alone in that. So I'm curious, like, what is that trade-off if you're a long-term investor in Facebook beyond just what they have to say about Reels this week?
Look, Mark's proven us wrong. It's a great question, Josh, but Mark's proven us wrong multiple times. I mean, if you look at the pivot to mobile, probably one of the greatest pivots of any management team ever, in moving from desktop app to mobile application and the mobile advertising experience that him and Cheryl pioneered. Then figuring out Instagram. Remember, Instagram Stories, which was getting its clock cleaned by Snapchat, cut off the demographic shift of older users to Snapchat with Instagram Stories. And now pivoting away from the traditional Facebook newsfeed to basically an interest graph from a friend's graph is a pretty monumental shift. And look, who knows, honestly, the answer to your question. I mean, anything is possible. But I will say, if you look at the engagement growth that TikTok has seen, if you look at how YouTube Shorts has literally exploded inside of Google's YouTube, I think all signs point to, and I think there's even some very positive signs you're going to hear about when Snap reports tonight of what's happening with Spotlight, which is their sort of TikTok-like product. But Reels is exploding, and there is no better company, Josh, at monetizing mobile time spent than Meta. That's why you buy this stock, is that there is nobody. They are purpose built for monetizing mobile time spent. And I think as this mechanic starts to work for Meta, the way it's working for YouTube, obviously working for TikTok, I think the place to benefit from it financially is going to be in Meta stock at 150.
All right.
Good answer.
We'll make that the last word. Rich, I appreciate your time. Interesting call, interesting timing, and I'm glad you shared it with us here on the Halftime Report. Rich Greenfield, you have been talking about reels and reels and reels and reels for months and months and months and months.
Well, because it did well last quarter, right? I mean, with $3 billion revenue run rate last quarter, I think they have to get to $5 billion for it to be neutral to monetization. So the question is, engagement may be very strong, and I expect it will be, just given all the checks that I've also done. But monetization is what's going to get you paid on this stock. And I think you have a couple of quarters to go on that piece. So I think it's going to be all right tomorrow. I'm hoping it's going to be all right. The valuation is very supportive, right? They are fixing the ad targeting, the Apple issues, the privacy issues. So they are doing things. But I think the monetization for Reels is really what's going to get you that next leg up and a re-rating higher. I just don't think it's tomorrow.
They're not giving creators any choice but to use Reels, and that's how they did this transition. It's like if you walked into Chipotle and there was somebody holding a tray as you walked in. We're doing chorizo today. Buy this. Like a lot of more people are going to buy it. The creators are seeing their stuff buried if they don't post in Reels format, and that's what's forced a lot of this engagement. I don't know how long-lived that's going to be. I guess we'll find out.